This single day trading tip that I'm going to be sharing with you in today's video can actually help you 10x your trading results, which means if you are able only to win about 1% of your trades, you can actually start winning 10% of your trades. Or if you're actually making 10 losses, we are going to help you reduce the number of losses you make per 10 trades. These trading tips are actually going to help you trade crypto pairs, forex pairs, synthetic pairs, and every other pair that you trade in the market. So ensure you stick with this video from the beginning to the end, because if you miss a single step, this might result in you losing your trading account. So make sure you are focused. Now, whether you trade ICT or SMC, or whether you trade support and resistance or the algo market structure, then this video will also be very helpful to you. So ensure you stick with me from the beginning till the end. The very next thing you need to know is that you need to turn off all distractions so you actually understand this thing I'm about to share with you guys in this video. If it's your first time on my channel, then my name is Kennedy, and on this channel I actually talk to you guys about trading while giving you guys tips that are actually going to help you improve in your trading journey. So if you want to see more videos like this, don't forget to like and drop a subscribe down below, and also drop a comment also, and let's get started with this video. So yeah, we'll be getting started with this video right away. So you have to make sure you pay attention. Now before I get started with this video, I want you to make sure that you pay attention to this video, because if you miss one single thing in this video, you might actually go and start blowing your forex account, which is what I do not want for you. I want you to actually use this information to actually change your trading journey as a whole. Now, I'm not here to promise you that after watching this video you become a millionaire after watching this video, although this is not financial advice, but this is something I've actually learned and I actually feel I should share with you guys right here. So do me a favor by clicking the red subscribe button and then dropping a like to this video too. So you can see right here, coming over to this point, you can see the market came to this zone, right? Market came to this zone and started pushing up. Now a lot of people actually enter this trade from here. A lot of people actually enter this trade from here and then put their stop loss below this low and then put their TP at this high, thinking the market will actually come and take off that high before it actually continues. Now they are not actually wrong, because market used to be in a downtrend, in an uptrend from this point. Market has been in an uptrend from this point upwards. So you can see right here, you have been in an uptrend from this point. Yeah, so they expect market to actually continue respecting that same motion. But this is where a lot of people actually get it wrong. So make sure you stick with me so you don't get this wrong too. Now, what a lot of people don't know is that the first thing you need to do is to actually know where the market is coming from, and then be able to determine where the market is going to. So you can see right here, assuming you entered for a long position from here. Let's say you entered from a long, you bought GBP USD from here. So because in this video we're actually using GBP USD, this works on any other pair and not just GBP USD. So you can see that the market actually started pushing off from this point, and then these things are called, let me take this off, these things are called knowing levels in the market. So you can see that the market actually created a fake out from there before actually start, he actually started dropping and actually took everybody out, especially if you do not set your break even at that point. So that's one of the things you need to know. So you first of all get to know where the market is coming from. Let's say right now we also want to know where the market is coming from and then know where it's going to. You have to start with our top down analysis. Now, what is top down analysis? Top down analysis is a type of analysis you do from the higher time frame to the lower time frame, so that you actually get to understand the market past movement and use it to determine the future movement. So for you to actually do your top down analysis, you have to go over to the 4 hour or start from the daily time frame. If you're a swing trader, this will be different, And if you are a day trader, this will be different. Now, in the previous video, I actually showed you guys the market was actually coming from this point, and the market actually went up and actually took off this high. So the market took off this high. We actually saw a bit of a retracement. Market actually started dropping. Now this has been over 2 months right now. So this has been over 60 days. This market has been in this downtrend. So you can see that it's here that this is obviously a downtrend from this point. Market has been in a downtrend from this point and is still respecting that same structure at this point. So coming over to the daily time frame, you can see that market has been in a downtrend, and then that's not all you are meant to mark out in this point. Since you have seen that you've drawn your trend line, a market actually respected this because it touched this second part, although you can actually drag this to make it to be three parts, but you can see that the market actually touched these two parts and actually started coming down. So the next thing you need to know is you actually have to go down to the 4 hour time frame, because on the daily time frame the trend might be different. Coming down to the 4 hour time frame, you can see that market was actually coming up from this point. From this point I actually mapped out here, and when market got to this area, market came to this area and started retracing. So let's map this out. So you can see that the retracement is from this area. So when market actually started retracing from this area, what you have to start looking for is sell opportunities. So you have to start looking for sell opportunities instead of buying opportunities. Even if it's for the short term, you have to start looking for sell opportunities. So people who actually are very familiar with ICT must have actually caught this move, because this liquidity zone was swept, and after this liquidity zone was swept, market actually started pushing down from there. Although market came back to the entry, but market has actually been pushing down from there and might actually take off this low. So assuming you enter this trade from here, you put your SL, you put your TP at this point, and then your SL should be at this point. So this is like a 5 hour trade. So if you are risking $100 on this trade, you should be expecting about $500. I'm going to be dropping this trade, maybe I probably might drop it in the channel community section. So make sure that you're actually watching out for that video. So if you're actually learning something from this new, then drop a comment and say yes, I actually learned something new, and click the red subscribe button just in case you haven't. If you actually want to start trading with my broker, which is linked down below in the video's description, make sure you click the link in my video's description box to actually start trading with my broker, and I'll see you in my next video.